Hello, in today's video I'm going to talk about property investing in Singapore. I've always wanted to do something like this, but there isn't much data on hand. So coincidentally, I have came across this ad on Facebook today, which have exactly what we need, which are numbers. As you can see, they are selling the fact that you can earn $500,000 in just 4 years. Find out how we have planned. Okay, so would you like to achieve this kind of results? And yes, as you can see, it sounds attractive. You can make about $500,000 profit in 4 years time, which yes, is pretty amazing. So I'm going to use these figures stated in the table over here and to just break it down into something simpler, something comparable, so it actually makes sense and you can actually answer the question, would you like to achieve this kind of results? Alright, so let me just bring up an Excel over here. And yep, definitely if you look at the price over the advertisement over here, and what we actually have is the purchase price and the sales price in per square foot. And definitely I think it's pretty safe to just assume that they haven't taken into account additional costs such as stamp duties and so on. So after a slight googling, here's what we have, and apparently here are the additional costs in buying your Singapore residential property. So you have stamp duty, additional stamp duty, blah blah blah, and so on. I have simply summarized it in our Excel over here, which I have extracted this data from the advertisement over here. Let me just put it aside. And yes, from the purchase price, it comes up to a initial investment of about 1.8 million for the property, and it was subsequently sold at like 2.35 million based on the sales price per square foot. And yes, this made you a profit of about 529,000 in 4 years time. So now let's just take into account all the costs that might be associated with our investments over here. And so the first 1 million of your property purchase actually attracts a stamp duty of 24.6 thousand, with the remaining approximately 800,000 coming in at 32,000. Since this is an investment property, I'm just going to assume that we already own one which we are staying in, so we have to pay additional buyer stamp duty at 10%, with subsequent commissions, surveillance costs and so on coming in at just 1%. Alright, so I'm not even going to take into any cost associated with selling, so no cost in selling, which I think is not true. Yes, so there will be some additional cost in selling your property. Okay, let me just bring this up. Alright, so you can see from here that from a stipulated profit of 500,000, it actually got cut nearly by half to 271,000. And yes, clearly this additional cost would eat up a substantial chunk of whatever profit is shown, like here 500,000. Yep. And this means that in 4 years time you would get a 13% total profit in your investment, which year on year cumulative annual growth rate using CAGR, it only comes in at about 3.1%. Right, so yes, at this point of time you should know that it sounds pretty bad already, right? And yes, so like let's to make things better, let's say you manage to rent it out at 2%, right? It is not good. Yep, you should know that rental property in Singapore is not that good. I have written an article about that as well, and this would give you a total yield of about 5% year on year. It's not so bad. Yes, I understand it's not so bad, but we have to also take into account that property investing requires a huge amount of capital. As you can see, you need $2.1 million. Right, it is not divisible and it is highly illiquid, and if you do not have a huge amount of investable wealth such that most of it is here, alright, so assuming you have 2.5 million and you just threw 2.1 million into a property, you might lose out on opportunity costs such as the recent stock market crash. And yes, you do not have spare capital to just participate in any future opportunities you might come by prior to selling this property. So this really makes whatever figure you see here much less attractive. Okay, and right, so just moving on to the second transaction over here. Okay, hold on. So second transaction, what's happening? Okay. Alright, so never mind, let's just see the second transaction over there, which comes in at a slightly lesser yield of, alright, now it's working, slightly lesser yield of less than 5% year on year, including if you rent out, right? So if you do not manage to find a rental, or like the rental is really low and insignificant per se, from just the transaction of the property, it only gives you a return of 2.8% year on year growth, and something that could come in at a net profit of 500,000 actually became like, yes, 243,000, and this would equate to a return of less than 12%. Right, so at this point I would like to remind you guys that the figures you see here are probably the best, the most attractive transaction profits available, given the fact that it is used for an advertisement and strategy promotion. So you will have to all of this. Would you like to achieve these kind of results? What they have planned for you? Yeah, so definitely these are the nicer numbers that they would want you guys to see. Okay, so it is highly likely that subsequent investors, such as yourself or whoever, right, will have a weaker performance than all of these shown here, and it's not even that good in the first place. So it is pretty bad, right? And alright, so if continue using this, still using the good figures, right? Let's see what we have, like at the last one over here. Alright, as you can see, this person bought at about 1.2 million and sold at about 1.4 million, making a profit of 255k. However, if you take into account all the additional, I would say, additional transaction cost, the net profit actually comes in at only 93,000. Okay, and that means it's about a 7% return over 4 years, which is pretty horrible, right? I mean, 7%, I can easily make it in a year, or you can even make it in a year if you would just get into equities. Okay, so, and assuming you actually manage to rent it out, it's only a return of 3.7%, which in most cases would equate to endowment plans of most sorts, right? Not that I'm advocating them, alright? And yes, so I hope that after going through all this data, you will realize that profiting a lot from properties in Singapore is actually much harder than it seems, since everything is so expensive. And yes, do not be attracted or baited by these huge numbers that people are throwing around, like 500k, right? So it might be better to pursue alternative investments which are more suitable for an individual with like more divisibility, with like more liquidity and so on, which I have mentioned several times in my blog. And yeah, so just this is the end of our video today, and thanks for coming.